saw pressure on Docebo, the software company whose activities include training customers to deal with your products. The company posted revenue in the fourth quarter that beat estimates, but the Q1 guidance for the year ahead, or the guidance for the year ahead, was much lighter than analysts had expected. Let's get more from Bloomberg's Stephanie Hughes. Stephanie.
Hey Andy, happy Friday.
Thank you.
Less of a happy Friday for Docebo there, though. Those shares fell as much as 26% today, which unsurprisingly marks its biggest intraday drop the software company has ever seen. So, like you alluded to, the Toronto-based software company did manage to get ahead of expectations in its fourth quarter as far as revenue goes, but it's the year ahead where it fell a little light with its full year revenue and annual recurring revenue. That came in later than what analysts were expecting. So analysts did note that a lot of this has to do with headwinds around foreign exchange, which makes sense. The Canadian dollar has been taking a bit of a beating over the past few months, and this tariff talk and tariff threats aren't really helping with that a bit. So that's expected to weigh on the company's revenue over the year ahead. Scotiabank analysts did note that despite the revenue miss, Docebo did have a strong quarter in the fourth quarter, and they did see some underlying strength in some of its segments, like enterprise segment and other business lines. So I think it comes down to how persistent this foreign exchange pressure becomes over the next year, and whether analysts take a bit of a second breather there and also recognize that underlying strength there. But in the meantime, it seems like Docebo is really getting some pressure thrown on it today, Andy.
And what's the latest with Energy Fuels? It's a player in the uranium market.
Absolutely. Energy Fuels, those shares gained by over 11% at its highest point, and that was the biggest gain since last October there. And the story here is that Roth Capital Partners upgraded the renewable energy company to a buy from a neutral rating and raised the price target to $8.30. The analysts said that all of their near-term concerns on the company have been resolved as the company managed to raise enough capital to really pay for near-term projects. But most importantly, they resolved issues with the Navajo Nation to transport uranium ore from the territory from northern Arizona to southern Utah. So that was a big key overhang as they managed to make that resolution late last month, and it was a really big dispute last year. So with that overhang gone, it seems like this, or for the moment, I should say, it seems like there's been more confidence returned to analysts and investors alike, Andy.
Thank you very much indeed, Stephanie. Stephanie Hughes of Bloomberg. Have a wonderful weekend, Stephanie. Up next, the closing bells on Bay Street and Wall Street.